Hello, everybody. Good evening, good afternoon, whatever part of the country you're joining me from. I'm currently in Port Harcourt, Nigeria, and as my custom is, I'm always happy and excited to be on your screen every Sunday by 6:30 p.m. Right, and so I'd love to know where you're joining me from. I'd love to know where you're joining me from. I'm currently in Port Harcourt, Nigeria. Let me know where you're joining me from. So today we are going to be talking about entry rules, applying Chartlit strategy, how to enter the market. So I told you guys how to do analysis, but today I'm going to be going down in depth how I get to enter the market. So let's take a recap on our last class yesterday. Sorry, on Sunday, last week Sunday. So we talked about applying the Chartlit strategy last week Sunday, and what did I talk about? We talked about session timing, identifying your levels, defining your rules, right? So today, I'm going to be defining our rules, right? That's what we're going to be doing today. We're going to define our rules that enable me enter the market. So I'm going to give you guys those criteria, those things I watch out for that actually, let me go into the market. So that's what we are going to be talking about today. And we talked about fundamentals and defining your risk. We'll go into that in depth into this class. Right? We'll go into that in depth into this class. So I'm here. Okay. Let me know where you're joining me from. If you're just joining, let me know. Drop your locations. Let me know where you're streaming me from, so that you can get on with the business of today. Right? Let me know where you're streaming me from. Yeah, we're live. We're live. We're live. Let me know where you're streaming me from. So whilst you're dropping your location in the chat box, I would love you guys to hit the thumbs up and share this video to your Instagram story, WhatsApp status, Facebook story, across all your social media platforms. Let people know that we are live, right? Let people know, share to that your friend, your cousin, your brother, whoever the person is that might need this lesson. So I love you guys to share. Let me go on and share on my end as well. Let me go on and share. Share to your WhatsApp story, Instagram, let them know. So yeah, okay. Someone said Google Guru for Apple. Nice to meet you. Welcome. Welcome. So we're done waiting for people. Right. So today we're going to be talking about entry criteria. Now, what are entry criteria? Entry criteria are those things I watch out for before I enter the market, right? Yeah, those things I actually watch out for, actually look out for before I get to make my trading decisions. So those are my entry criteria. So today I'm going to be breaking down those criteria for you guys so that I'm actually going to simplify things and give you guys a thought process when you're looking at the chart, when you want to place a trade rather. So the first thing we're looking at is in entry criteria. The first thing we're looking at is the higher time frame buyers. Now, you guys remember I've always taught you guys market structure gives us direction. So that's the same thing as higher time frame buyers, right? Higher time frame buyers, knowing the direction of the buyers of the market. That is number one. That is the number one thing you should know. If you don't know the buyers, no trade. Then you don't have any business executing a trade or placing a trade for that day. So that is it. So number two thing is location, which I talked about. I've told you guys key levels, right? Where market is actually likely to play out, where a trader is likely to make their decision off of. So that is why I call location, right? Location is basically just key levels, right? Key levels, and we've talked about key levels in the previous class. We've talked about psychological levels, point of hesitation, that's support and resistance levels. And last week, I think I introduced you guys to previous high and the previous day's low, right? And this week, we are going to look more into that. As I'm going to be breaking the trades I took throughout last week. I'm going to be breaking down all those trades alongside in this lesson so that you guys get to understand how I think as well. So number 3, we are going to be looking at liquidity sweep. Now, liquidity sweep. If you're hearing what liquidity is for the first time, no problem. I think I talked about it in last class a little, but we'll have a whole live session to talk about liquidity, because liquidity is not just something small. Like, you can actually like jump back into this lesson. So I'm just going to break it down so that you guys can actually understand where I'm coming from this lesson. So now, what is liquidity? Now, people say liquidity is what drives the market. Yeah, liquidity is what drives the market. But to me, in order for it to be easier for you guys, I want you guys to see liquidity as fuel, right? Now, take the market as a very big, machine, or let's say a big car. Let's say car. Now, the car will move unless there's fuel inside the car, right? So that is liquidity. Liquidity is the fuel that gets the market going. That is what liquidity is. It's a fuel that gets the market going. Now, and now, once we know about fuel is not just scattered. You can't just find fuel anywhere, right? You find fuel at specific places like filling station, wherever they sell fuel, right? So fuel is not just scattered. Now, liquidity is not just scattered all over the market. Liquidity is at specific places in the market, and today we are going to be looking at those places. Now, places where you can find liquidity in the market, places like the previous day's high and the previous day's low. That's what I watch out for. Liquidity sweep. I wait when the banks are getting in. After the banks have finished sweeping liquidity, gathering fuel to get into their position. That's when I get it. Because for those of you who have been trading with me, you've noticed that sometimes I might call a trade, and trade just hits your stop loss and then quickly reverses to the original direction. Now, we're being swept out as liquidity. So that's just how it is. So liquidity is fuel that drives the market. And the next thing I'm going to be talking about is confirmation. And I told you guys, what I told you guys about confirmation? Candlesticks, right? Candlesticks gives us confirmation. Candlestick pattern. And we've talked about W pattern, the M pattern, the head and shoulder, reverse head and shoulder, different candlestick patterns we've talked about in the previous lessons. So today we are going to be combining all these things. So I'll show you guys what I watch out for. And by the end of this video, you should actually know what to watch out for before you place a trade, or what you actually play out first before you place a trade. So number 5 is risk to reward ratio. I think I made a mistake. Let me edit this. Risk to reward ratio. Yeah, that was not correct. Save. So risk to reward ratio. That is number 5 thing I actually look out for. Now, for those of you who have been trading with me, you guys figure out that whenever I'm taking a trade, my risk to reward ratio is whatever I'm risking, I'm looking to make times 2. That is 1:2. Some people can do more. Some people can do 1:3. Some people 1:4, 1:5, 1:6, 1:10. But I'm only looking to do 1:6, 1:2 rather. 1:2. So if I'm risking $10, I'm looking to make times 2 of that $10 in the market. That's $20. And if I'm risking 5, I'm looking to make times 2. So whatever my risk is, I'm looking to make times 2 of that. Is that clear? If you understand what I'm saying, if you're following up until now, I want you to drop number 1 in the chat box. If what I've been saying so far makes sense to you, I want you to drop number 1 in the chat box. Drop number 1 in the chat box. What I've been saying so far makes sense to you. Drop number 1 in the chat box. what I've been saying so far makes sense to you? Drop number one in the chat box. Drop number one. Okay, okay, okay. I think it's making sense, right? So, with that being said, the next thing you're going to be looking at is fundamental analysis. Now, this will have a whole class of its own. But today, we're going to look at it just shallowly, right? We're not going to look at it fully just so that you guys can actually relate to this class about this issue, guys. So, what are fundamental analysis? I've told you guys about three different types of traders and three different types of analysis in the previous lessons. So, fundamental analysis, now, like I said, liquidity is fuel that drives market. Now, fundamental is like the throttle of the car that like makes the market moves faster. Fundamental just gives the market reason, the faster reason to take liquidity, right? So that's what fundamental is. Fundamental is just like a catalyst that speeds up the liquidity crowd. You understand? So that is just fundamentals. So we have to pay attention to fundamentals too, because they play a very crucial role in the forex space. So we have to pay attention to fundamentals. And what are fundamentals? Fundamentals are like economic news that concerns the currency pair you're trading. Like if you're trading USD correlated pairs like USD JPY, you should be looking at news from Japanese yen and news that concerns the US dollar. If you're trading GBP JPY, same thing. News that concerns the British pound and ones that concerns the Japanese yen. So these are the fundamentals you're supposed to be looking at. And I'm going to show you guys the platform I actually used to get my fundamental analysis to as well. And then the seventh thing is invalidation. Now, this is very important. When I talk about invalidation, now, invalidation is a rule I give to myself before I get into a trade. Once I see a setup, and I want to take that setup. Let's say I'm buying, for example. Now, invalidation is a rule I set in place. If this happens, I get to close out this trade. That is invalidation. So you should know what you should do if the trade is going against you, right? So now, invalidation, you should have your stop loss in place, right? Your stop loss is an invalidation. The stop loss doesn't mean you are wrong. It just only means that that trade is no longer valid. Now, what do I mean by that? For example, you buy a phone, right, for like 10,000 naira. And when you buy the phone for 10,000 naira, you want the phone to go up to like, let's say we're into the phone business. You want the phone to go up like 20,000 naira, goes up in value so that you sell it and make profit. Now, your stop loss is an invalidation for you. If it drops from 10,000 naira to 8,000 naira, I don't want to take much loss. I'm going to sell it out like that. So that is invalidation, right? So that is it. These are the 7 things I look out for before taking a trade, right? So these are the 7 things I look out for. I think the power is out. Don't worry, it will be coming out back pretty soon. So those are the 7 things I look out for before taking a trade. So now let me take us to the chat so that we get to understand what I'm saying. Let me share my screen so that you guys are going to see, because I promise those on my Telegram community that I'm going to be breaking down the trades that we took for last week. We're going to be breaking down all the trades in this live session. So if you can see my screen, let me know. If you can see my screen, drop number 2 in the chat box. If you can see my screen, drop number 2 in the chat box. If you can see my screen, drop number 2 in the chat box. If you can see my screen, drop number 2 in the chat box. Okay, okay, two. All right, so let's move on. So first off, I think the first trade I took for the week was on GBP USD. I think that was on the 27th. Let me go to my Telegram channel. Sorry, hold on. go to my Telegram channel so that you guys can actually see this. Let me show you guys the trades I called. Share screen, entire screen. Share stage. So yeah, you can see my screen. Let me know. You can see my Telegram screen. Let me know. Let me know. Okay. Yeah, I guess you guys can see. So the first trade we called was I called rather was on April 27th, which was on Monday, and this was on GBP USD. You can see it right here. This was the trade. Now, let me show you guys exactly what I saw back then. 27th. Let me see. Okay, I think yeah, this was the trade, and you can see it really did well before we closed out. Now, what did I see? First, I'm going to mark here. Let me mark it out so that when we go to the higher time frame, you get to see it. Let me reset this. Okay, so that we get to see it. So first off, you want to be knowing the market session, market bias, right? So that was what I did on Monday. And on Monday, I knew the price. I marked out this level right here. And I saw price reacted here, pushed up, and was likely coming to make contact at this level right here. So I went to the 1 hour time frame and I saw this level too as well. I marked it out, this one right here. Because price go here, drops, go here, drops. And going down to the 15 minutes to pick my entry on Monday, this was what I saw Monday, and I saw that price has given me like a double pattern right here. Because this happened on Friday, pushed up, dropped, gapped, pushed up again, came here, and gave me the double pattern. Now, this was one confluence I saw, one criteria I saw. The other criteria I saw was price taking out the previous day's high, like I told you, grab liquidity. It came here, pushed up, grab liquidity, full trader. It was going to sell, grab liquidity, came back up here. So I saw this move and I'd be like, okay, it's reacting on the previous day's high, the double pattern. So therefore, price is going to be going up. And this was what happened on Monday. And price got up to this point and eventually started rejecting. Upon seeing this rejection, I told everyone to close out the trade. And this was how we close out the trade in profits. Right here. I think you guys in Telegram, you're going to see it. You can see it right here. This is when we're in profits. And I told everyone to break even. I also call USD JPY. I told them to close GBP USD in profits. I also called USD JPY so as well for a sell. This trade was not like a planned trade for me. I just saw it and I was like, okay, let me just check it out. I didn't follow my rules properly, and I had to pay dearly for it. So you can see right here. What did I say? I saw rejection, broke previous day's low, came back and gave me like an M pattern. And you can see this was the M pattern, and the market never gave us an opportunity to be right. It just pushed up and went straight for stop loss. But before it hit stop loss, it got invalidated for me, and I told everyone to close out so as well. You can see it's right here. And I was like, when I told them to close for GBP USD in profits, I also told them to close USD JPY. It has been invalidated. Now, on Tuesday, to GBP USD sell again, GBP USD for the sell, which you guys can see right here. And what did I see, right? What did I see? I saw price taking out the previous day's low. This was the lowest point price got to on Monday, and it came back down, gave me an M pattern right here. You can see it on this level and closed below the previous day's low. So whenever it does close below the previous day low, I'm looking to trade below it. So I called out a sell from this point, and you can see how my price did. This was it. And the next trade I called out was this was it, profits, and this was when I told everyone to close out. This was when I told everyone to close out. The next trade, and okay, this was on Wednesday, I guess. This was on Wednesday on 29th of April. Called out XAUS. This trade was one of the lucky trades for me. This trade, all my criteria didn't align, but I just felt it, and I was like, okay, let's take it out. Let's take this trade. So what did I see in XAUSD? Going down to the 4-hour time frame. What did I see on XAUSD? Now XAUSD for a long while it has been on an uptrend, right? There's been an uptrend, been trending, and eventually started making lower lows, lower highs, lower lows, lower highs, and wants to continue. So I saw that on the 4-hour, my bias has been established as bearish. It's a bearish bias, so I should be looking to do more sells. So that was what I saw here, and I marked out this key level. You can see price go here and pushed up aggressively. I marked it out. And then on the 15 minutes time frame, what was I looking for? This was the previous day's high. This was the highest point market got to previously. So obviously, the first liquidity sweep will be the previous day low. Now, like I told you guys, liquidity is like fuel, right? It has where it's resting. It's not scattered all over the charts. It's at specific places, like previous day's high and point of hesitations. Now, when we look into liquidity, we'll talk about that. So this is what happened. Now, I saw that price rejected off here. It was like a W pattern. And I figured out that the liquidity it's going for is the previous day's low. So I called it out, right? And I was like, I called out the sell, and the sell pushed down. We exited this trade about somewhere around here. We eventually hit the profits. So this was the only trade on gold, and also called on GBP JPY same time as I called on gold around same time. It hit stop loss too as well. So I was thinking price will come and sweep this low, give me like an M pattern right here. M pattern, triple top kind of, and then started pushing downwards. So this was a key level for me, and this was the highest point price got to. So you weeks it out, not completely, but with just tiny weeks. If I zoom in, you can see it. Let me zoom. So you can see the tiny weeks right here, weeks it out, and I was like, okay, I felt there's grabbed enough liquidity, so the next liquidity target would be the previous day low. So I called for a sell. Eventually, it hit stop loss, and by New York session, I saw the price has closed above the previous day's high. So we're going to be looking to buy. So I called out the buy by 12:15, and we actually recovered back that loss from this one. And then this was on Wednesday, and then on Thursday was very, very crazy. Right, on Thursday, what trade did I call on Thursday? Let's see. Thursday on 30th of April, I called a GBP USD, and this was my favorite trade for the week. This was my favorite trade on GBP USD. So I traded mainly GBP USD last week because that's the pair I saw setups on. And you can see this met all my criterias, right? Now, criteria one, what did he meet? Now, I had a point of hesitation here, broke it, and this was my previous day's low. So what did he do? He swept the low. Sorry. Swept the low, the W pattern. You can see it right here. and came back to reclaim it. I would have gotten it right here, but I was waiting for an extra candle to confirm momentum in my direction. So you can see it right here, double pattern, and we got some stop loss below here, and our target was the previous day's high in the body. Let me take away this one. Take away this one, and you can see he actually smashed take profit. And I also called USD JPY roughly around same time, and few minutes later. And this was what happened. I called USD JPY for a buy because USD JPY has been an uptrend. If you go to the 4 hour, you're gonna see it has been an uptrend, and you can see it. Let me reset it so that you get to see it. Reset. You can see it's an uptrend. So you broke above this high right here, and this was a point of hesitation, a previous supply zone or resistance. We broke above it, and we was looking to continue the upward movement. But the Bank of Japan, they had other intentions, right? They had other intentions for JPY. You can see broke above this point of hesitation, try to retest it and continue the upward movement. So I was thinking, okay, it's time to continue the long move, right? And this was what happened. Price hit our stop loss. What actually happened here? Liquidation, right? So what actually happened here was the Bank of Japan felt that the price or the value of JPY has actually been dropping, so they had to step in to protect their currency. So that is why they bought JP, they bought Japanese yen aggressively. And this was what happened. You can see the time. How many pips was this? Let me see. From here to about over 500 pips, if I'm not mistaken. Yeah, 500 pips. 500 pips. You can see the liquidation. And this is what 30 over, this is what billions of dollars, right? For that move. They stepped in and then they pumped money into it. Let me explain. Now, let me explain what was there. So what actually happened there was the Bank of Japan, BOJ, which is the Bank of Japan, they felt that the currency, the currency which is Japanese yen, is being too weak, right? So they had to step in. For example, just like the price of USD to Nigerian naira, naira is very weak. So it's just like our banks not deciding to be like, okay, we feel that naira is very weak. Let's step in. Let's pump money into our currency so that it goes up in value. And what happens once people buy something, there's always a demand. Now, let me tell you guys about demand. Now, so you guys remember that when BlackBerry came out back then, power is back up. When BlackBerry came out back then, everyone was rushing it. BlackBerry, 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 BlackBerry. But now, no one talks about BlackBerry. Why? Because there's no longer demand, right? There's no longer demand, so no one cares about BlackBerry again. So that's what actually happened. So the people of Japan actually, banks of Japan, but the government decided to intervene into their currency, right? Pump money into it so it goes up in value. And I told you guys that whenever you're buying a currency, you're selling your own. So if I tell you go and buy USD JPY, it means we are buying USD and we are selling JPY. That's what's currently happening. So the banks felt that traders are actually one-sided on the market, right? They're just basically buying. If I take you guys back to the chart, so you're gonna see that the long run, let me go to the daily time frame, right from this point, right from April to the fifth, price has just been going upwards, upwards, upwards. But since inception, it has just been an uptrend. And so this is where price started from. You can see, let me take you guys back. History, on the weekly time frame. 2003. You can see price has just been going up, upwards, upwards. Now, go down to the daily time frame. There's a level here. This level, Banks of Japan has been protecting this level for a while now. I think they've been protecting this level. They're actually regulating it. They don't want it to be more expensive to the US dollar. You understand? They don't want their currency to drop in value more than a certain or drop in value more than a certain. So this is what happened. It got here, it dropped. So it got here, it dropped. So the moment it got here, they're like, it's going to become too expensive, so let them buy it instead and protect their currency. And you can see it's liquidation. So that was what happened. That was what happened on Friday. And if you check GBP JPY, all these pairs correlated with JPY, you can see same thing happened. Let me go to the 15 minutes so that you guys can see it properly. You can see it. Steps in and boom. That's what happened. Go to Euro JPY. You're gonna see similar stuff. Similar stuff. Why? Because these pairs are created with Japanese yen. So this is Euro JPY and GBP JPY, same US JPY, same thing. GBP JPY, same thing. So that is what has been happening, right? But that was what happened on Thursday on US JPY. Never got an opportunity to even be right. When we got in, dropped aggressively. When we got in, it just dropped and liquidated everybody. Liquidated everybody that was holding their long position. Everybody got stopped out. And this is what happened. So this part of liquidity, there's always been liquidity here. Now there's liquidity here because people came here and bought. So their stop losses are at obvious levels, right? Point of hesitation, that's where stop losses are. So that's how market moves. Market goes to those points, they grab fuel, and liquidate and push very fast. Now you can see at this level, there's liquidity because buyers are actually here. So if someone is to buy now, it's going to buy from somewhere around here. It's a swing trader, stop loss somewhere below here, and it's going to be targeting. Let's say this swing trader has a risk appetite like we, whatever is risky is looking to make times two. Now, if we extend this to the future, you can see that the moment this liquidation happened, we would have gotten stop downs. So that's what happened. They liquidated everybody because they figured out that their currency is dropping in value and everyone is one-sided market. So they had to liquidate everybody, swept everybody. People that bought from here, expecting price to go up, swept them. Those guys that bought from here, expecting price to go up, swept everybody. Everybody was swept out. So that's what happened right there. So now back to the trades I called out. Now let's go to but this GBP USD actually made up for the stop loss we had on USD JPY. You can see right here when I told that was SL3 on UJ. But GBP actually hits take profit because I told you guys this was the best trade for me for the week for last week. And this was where the banger happened. Right? This was on the 1st of May. I called that GBP USD again for a buy. And let me explain what I saw. Let me tell you guys the trade. I called that GBP USD and BTC for buys too as well. And this was what happened. So on GBP USD on Friday, which was on the 1st of May, already we've established that we are on an uptrend on GBP USD. So this was it. This was the trade. I saw it broke above this point of solicitation. You can see I marked it out right here because price came here, dropped, stayed here, dropped, got here, dropped, eventually broke above it and retested it. So once in the retest and break off previous day's high, I was like, okay, it's time to buy this thing. Eventually we bought, and the moment I told everyone to close out, I started seeing big rejection. Price go here, started rejecting. I was like, okay, I'm satisfied with my profits. Let's close out. And eventually this happened. We have held any longer, waiting for full TP. We have taken a loss on this pair. And then this was on BTC. What did I see on BTC? Take you guys in the past. BTC actually smashed take profits. So eventually, I saw that BTC is trying to reclaim the point of hesitation. You can see price broke here. It's just been playing above this low. The moment it broke below, it tested it dropped. Came here, tested it dropped. So what did I see? I saw the 15 minutes time frame that price has broken the previous day's high. This was the highest point price got through on Thursday. And on Friday, broke it, came here, gave me my W pattern. So like I told you, if price breaks previous day's high, I want to be trading above the high. If it breaks below it, I want to be trading below that low. But if price eventually had broken it, came back to close inside with an M pattern like this, I would have been looking to trade inside of it. So that was it. And I called out this trade and we're in drawdown for a short while. And the moment New York session came in, because BTC USD moves aggressively during New York session. So the moment New York session opened, this was the aggressive move, smash, take profits, and we're able to recover every loss and ended up positively for the week. The Telegram link will be dropped in the comment section so that whenever you're watching this video, if you want to be a part of the Telegram channel, it's here so that you get to click in, be a part of it, and get free feedback. You know what? You know some people's problem. Some people they love doubting, right? You call out the trade for them and they'll be like, "Oh, this trade, I don't trust it. I don't trust it." And then at the end of the day, trade actually does well. So I don't actually, for those of people trading, I don't actually promise you every day is going to be a win. But what I'm actually looking at, what I'm concerned about is at the end of the week, I'm actually profitable, even if it's $1. Last week, it's just $3. You understand? So at the end of the week, even if it's $1, after taking so many losses, I'm able to cover, and then at the end of the week, I'm at break even. But I have $1 added to my capital. I'm fine. That is the win for me because trading is a war. Now, for people who are actually concerned about their profit and loss for 3 months, for them, every day, every week, every month is the battle. At the end of 3 months, at the end of their trading span that they're actually looking out for, it's 3 months. If at the end of the 3 months they are profitable, then they've actually won the war. Actually won the war. But for me, my own is I'm looking at every week. So every day for me is a battle. I may not win the battle that day. Following day, I'll make sure I come back stronger and actually recover back those losses. And so at the end of the week, I actually end up profitable. So that is what I'm actually after. So all you just have to do is be consistent. Once you're consistent, take losses, but at the end of the week, we're looking to be profitable. So that's what I'm looking at. Some traders down is at the end of the month, they are looking to be profitable, even if it's just $5 added to their capital. A win is a win, right? Doesn't necessarily have to be big. So that's just how it is. So that is basically what we did for last week, and that's basically what we did for last week. So now, let me talk about liquidity sweep because people don't really understand. Let me just go over the criteria again, right? So that you guys get to understand. So whenever I'm looking to trade, okay, let's say tomorrow is Monday now. I'll be looking to trade. I'll open the charts. I'll come on my trading view. I'm looking to call out trades so that people can join me take those trades. Now, what am I looking for? Now, I'm looking for 7 things, which I called out earlier: higher time frame buyers, location, liquidity sweep, confirmation, risk to reward ratio, fundamental, invalidation. Now, first of higher time frame buyers. What's the higher time frame buyers? What direction is the market? Like I told us that market structure tells us the direction and the bias of the market. What is bias? Just where's the market heading? Direction in the market. So that's bias. So that's what I look out for. First thing I look out for is the higher time frame bias. So I always zoom out. When I mean zoom out, I go to the daily time frame every day to see the direction of the market. So I go to the daily time frame, go to the daily time frame, see the direction of the market. So let me show you guys what I actually do every day. Let me share my screen. So this is what I do every morning. Let me take a screenshot. UJPY. Now, what am I looking for every morning when I wake up? I come to the daily. First, what I'm concerned about is the buyers. I'm not concerned about anything. I'm looking at the buyers. Where is market? Where market is headed to? Now, this is what I do. Now, I can see that our price has been trending upwards. Forget this thing that the market today. Market is in an uptrend. So, except it started giving us lower highs, lower lows, lower highs, lower lows. So, market has been in an uptrend, right? Price giving us higher highs, higher lows, higher highs, higher lows. So, that's what I look out for. That's the first thing I look out for. And then the second thing, which is on my list right here, I gave you guys. The second thing is the location, right? Second thing is the location. Location. Second thing is the location. Now, what is location? I put out the location at key levels where it's actually going to happen, where traders are actually going to make their decision of where they're going to enter into the market, where they're going to get out. So that's location. So now, once I have the buyers, higher time frame buyers established, because you have to follow the higher time frame buyers. If you don't know the buyers, then no trade, because higher time frame buyer shows us a clear picture of where the banks are actually pushing price to. So no buyers, no trade. So you want to be asking yourself, when you zoom out to the higher time frame, are we trending? Are we in a ranging market? What is price currently doing? Where is it currently headed to? Now, once you've established that, now you've established on UJPY that we are in an uptrend. So the next thing you're going to be looking at for is location. Oh, traders actually take their trading decisions from. So that's what you want to be marking out right here. So we head back to the chart. Then on the 4 hour, we want to be marking out. Let me turn up the session break so that it doesn't get confused. So in the 4 hour, what are we looking out for? We are traders going to take decisions off of. Yes, this is a key level right here. Now you can see after this liquidation happened that the banks of Japan steps in, the see price came in rejected. Why? Because traders saw that okay, this is a key level, right? So they are willing to get in from here again. This is another one right here. So this was what happened, right? You can see this obvious key level. Now we've established that this is a key level. Go down to the 1 hour. You see our current trend. You can see the price came there, pushed up, drops, rejected, consolidated around here, eventually took out this high, right here, this high, eventually took it out, came here, and now drops now. Now, I want to establish that we are in a downtrend. See, price comes back and take this low right here. Well, I didn't take this low is still protected right here because buyer steps in. So we're basically still much in an uptrend, right? So we are still in an uptrend. So on the 15 minutes time frame, what am I looking for? I'm looking for my entries. Once the market open, I turn on my session break. Whenever I turn on my session break, so you get to separate the previous day's trading activity. You can see this line right here, this dotted line. Now once the market open, you see another one forms. So that is what I look at. The location. Now I have my my location established. Now what am I looking for? Liquidity sweep. Liquidity sweep. Now liquidity, as I told you guys, it's full, right? Since the market is like, let's say, a very big ship, and ships and jets, they always move based on they have to be filled with fuel. And fuel are not just in random places. Fuels have specific places they stay, either in the filling station or the tank of the jet or the ship. So that's where those fuel are. So now what does price does? Price is just like the vessel, let's say the ship or the jet. Now what does price do? Price just goes to tap those fuels, gather those fuels so that it can be able to move. Sweeps liquidity. That's liquidity. So now liquidity. Now what are those liquidities? Liquidities are orders. Stop loss, buy orders, sell orders, those are liquidities. Now, in order for the rule of trading has always been, in order for there to be a buyer, there must be a seller, right? So now, the banks, since they have a very, very big size, they want to trade, and maybe they might be wanting to trade over like, they have very big capital. They want to trade over like 30 billion, 40 billion. That's what's in their account. It's not $1 million. It's not even $100,000. It's not $100. Those guys, they are very, very big. They have very big amount of capital. And now, in order for them, since they're so big, in order for them to, you know, get into the market and place their own trade position, it's not like us that we just pick up our phone and press buy, and they're already in. They have to get into their positions gradually. What are they doing? They need liquidity to get to fill in those their positions. Because since they want to trade, for example, they want to buy. Now, in order for them to buy, they need that exact same amount of sellers to buy. So that's what they need, right? They need that exact same amount of sellers to buy. Now, what actually happens? They start getting into their positions. And what does the market algorithm do? Market algorithm starts dropping, looking for orders, looking for, if you want to buy, it's looking for sell orders to match those that buy orders. Now, mind you, when you're buying, your stop loss is a sell order. Let me explain. For example, you get this phone for 10K and you're looking for it to get to like 20K, so you sell. So now your take profit is also a sell order. So that price you're looking for it to get, that your take profit is a sell order. You're telling your broker that price gets to this level, sell it out for me. I want to make, and I want to keep this profit to myself. And your stop loss is also a sell order. You're telling if price gets below this level or gets to this price, okay, let's say you buy at 10K and you put your stop loss at 8K. I'm like, if price gets to 8K, I don't want to take much losses. Close me out in this amount of loss. So that is your sell order. You're telling your broker, okay, if it gets to 8K, I don't want to lose my entire capital. Let me just take that loss of 2K and sell it off because I feel it will drop more in value. So that is that is also a sell order. Now, your normal sell entry is also a sell order. And then when you're selling, it changes. When you're selling, your take profit is a buy order. It's just reverse of the buy order. Now, when you're selling, your take profit is a buy order. Your stop loss is a buy order. Now, here's what happens when you're selling. Now, when you're selling, you're telling your broker, borrow you money that you feel that maybe, for example, you want to sell from, you tell your broker that I feel that this thing will drop in value. Maybe let's say, for example, it's at 10K. You're telling your broker, borrow me money, let me just sell off this. Let me buy it as expensive, sell it off. And once you sell it off, you make money. When it's cheap, you can buy again. Now, your broker doesn't have a problem with that. Now you're able to sell. You sell from 10K, it gets to 8K, 9 gets to 8K, 7K, 6K, 5K, 4K, 2K, 1K. Made profits. But the moment you buy, and instead of it dropping in value, it goes up. That's when you're taking losses. Now that's your stop loss. Now what your broker does, the broker will close that position in loss, and you have to pay them back. So that is where your loss comes from when you're selling. So that's just how it is. Now, back to what I was explaining, liquidity. Liquidity at resting points, filling stations, where banks, the market algorithm goes to grab them from. And let me explain what I mean. Let me go to the clean charts. Let me go to GBP USD. Now, you can see this trade now. Now, this was previous day's low, and it is resting below it because it's the lowest point price, but so people started buying again. Now, what the market just came here. They want to buy initially. Look, the banks they want to buy initially. Now, they start getting into their positions. Now they're getting into their buy position. What is the market algorithm doing? It's searching for stop losses. Comes to this price, 1.3. You can see the price right here at this point. Comes to this price, 1.34799. Maybe it's just 10,000 worth of buy orders or sell orders at this point. So he taps stop loss here. Comes back here, gets to 1.34709. Grabs orders. Comes back here, drops again. Just like that, just dropping. Taking orders. Gets here, pushed up a bit. It's taking orders. And now the moment all their orders are filled in complete, this is what happens next. You can see the explosion in price. Boom, 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 boom. Because they've already gotten into the market. So they've grabbed liquidity. They've grabbed enough fuel that I can actually, you know, make this their move actually play out. You understand? So they just need to that amount of liquidity. And you can see the amount of liquidity gathered here. Look at the move they resulted in. You can see our price busted up for the whole day. And it came here, dropped. Now people think it's gonna be selling. Price might be selling. Came here. They wanted to buy initially. What did they do? Starts grabbing liquidity up till this point. Came here, there was enough liquidity. If there's not enough liquidity, you see price will still push down further before going in. Let me take it to silver. I saw something similar. Now, this was what happened. This was silver on Friday, and this was the previous day's high. Initially, banks are looking to buy, but there's not enough liquidity to match their buy orders. So what are they looking for? They start searching for liquidity and creating a fix sale. People start selling, enough sell orders to match buy orders. And before you knew it, this happened. Later, everybody selling, took their stop losses and pushed up. That's just how it is. So I was waiting for price to come back to this point so I buy, because this is what happened on this was point of hesitation. You can see price got here, dropped. Now, the moment it broke above here, gave me a double pattern. And I was waiting. I told you guys I only get to the trade by 7, 8. I was waiting by 6:15, 7 a.m. Still not ready. I knew that all these things is just liquidity grab before they eventually get in a long position. So I was waiting. When it came back here, that's enough liquidity. And you can see this is a double pattern. Look at it properly. When looking at it, it's like a double pattern. You can see right here. And then pushed up aggressively. So that is just what the market does. That's what it does day in, day out. Come rain, come shine. That's what the market does. So the next thing I'm going to be explaining for you guys. Now we've established liquidity sweep. Now confirmation. Now let me take you guys back to the trade I called up of GBP. Confirmation. Now, let's go to GBP. GBP. Now, what actually confirmed this trade for me was you can see the double pattern after sweeping the previous day's low liquidity. You can see the double pattern. It swept it, came here, gave me double pattern. So this is confirmation that okay, price is ready to long now. And you can see after sweeping previous day liquidity, went to take the previous day's high liquidity. After taking the low, went to take the high and even the highest point. Now, why did I pick this high? Because this lower high right here was taking out this lower low, this lower high took out this lower low. You can see it right here. You can see price broke lows again. After coming here, it dropped. Came back here, dropped. So this was the highest point for me. The price got to recently or the new trading day. So that's what I picked out. So that is what happened. Confirmation. This was a confirmation for me too as well. After price taking out the previous day's low liquidity, and gave me a confirmation, the M pattern. You can see this looks very much like an M. So the market is dynamic, it doesn't form perfectly on time. And this is what happened. Price dropped just like that. So you need those confirmation. Without confirmation, even if you have your bias ready, you have your location ready, you have liquidity sweep. If there's no confirmation, then you don't have any business on the chart. If you find it comfortable passing out on trades, all right? Now, let me take you guys back to silver. Now you can see silver price dropped. Right? Give me a double pattern here. Now, I didn't confirm this move because this is what happened. It didn't give me the double pattern. I would have gotten in this trade had it been price came here to the previous day's low, right? and gave me the W pattern like this. I was waiting for it to come here, so I would have gone in for a buy position, for a long position, somewhere around here. Put my stop loss here, and then target 1:2, nothing more. This is what I would have done. But eventually, it didn't get there. Why? Because market has already grabbed enough liquidity from the moment it got here. So I didn't. It wasn't enough. Then it should have dropped for the grabbed enough till it satisfied that push up. But the moment it got here, there was enough. There was already enough liquidity. So I didn't get in on this trade. I actually passed the trade. Same thing on next USD. Similar something. You can see this was the previous days where I was expecting price to come and sweep. It didn't sweep. It came here, grabbed enough liquidity and pushed up. So that is just it. Right? That is just it. That is just it. So the next thing we're going to be looking at is risk to reward ratio. Yes, I see. Anytime I take a trade, once I've done my analysis, the other four criteria I look at, entry criteria has been met. Now the next thing I look out for, ask myself, can this trade give me 1 to 2 weeks to reward in the long run? Can it give me 1 to 2 weeks to reward? If it can't, and then I'm going to pass on that trade. Trade is not able to give me 1 to 2 weeks to reward. I'm going to pass on that trade. Now, let me explain what I mean. Now, for example, now let me take guys to silver. Now let's have this scenario that silver came here, give us a W pattern. Just hypothetically speaking, give us a W pattern, came back inside here, and I saw this move. Now I saw this move. Right? I saw the move. Now, and I get in long. Okay, no, let me not use this one. Let me use what actually played out in the market. So now, okay, let's say price broke above the previous day's high, give us an end pattern, closed inside, right? Give us an end pattern. You can see the end pattern. Wait, let me stay in drawing mode. Closed inside by 7. Now, let's say we want to sell. Now, selling, obviously my stop loss would be here because I set stop loss based on structure, and I would have been risking over $81 on this trade with minimum lot size of 0.01. That's why I'm trading silver. I don't even call it out my Telegram community because people are very funny. They are greedy. Before you know, instead of using tiny lot size, I'm going to use 0.1 and start risking. Using lot size that if the trade just push against them, is liquidating them because they don't have enough money to put that trade. Now you can see the risk reward ratio of this trade is 1.49. I would have targeted 1:2. I love to target after price slips the previous day's high. I love targeting the next liquidity point. And you can see my next liquidity point will be about 1.18 fixed reward ratio. So this would have happened. I'd have extended this to 1:2. So now, if this actually played out as my bias, now if they actually wanted to sell, right, then this would have been a good trade. But since I knew that market is not going to be selling anytime soon, then me taking this sell trade is just pointless. It's just me going against my rule because I know it's not going to give me 1 to 2 weeks to reward because I knew that at some point, once market gets here, it will react. But eventually, it never got here. But some people want to force things. They know it's not giving them 1:2. Now, when it gets here, they'll be like, oh, it's still going to drop, it's still going to drop. And before you know it, price hits their stop loss. So it's one of those things. So that's what I look up. If price is not going to give me 1:2, then I pass. Then take guys to cheap figures. You can see this trade right here. The moment I got in, you can see my risk to reward ratio is 2.28. That means every $1 I'm risking, I'm looking to make, and like I'm looking to make times 2 of that $1. So if I'm risking $10, I'm looking to make times 3, times 2 rather. And you can see it actually hit a profit. So those are the kind of trades I look out for. Those are the kind of things I look out for. Price is not going to give me 1:2. I'm passing on it. That is another thing. So the next thing we're looking at is fundamental analysis. Now, how do I do my fundamentals? Now, let me show you guys. There's a platform I use for fundamental analysis that helps me, do my analysis, my fundamental analysis. Like gets me informed on what's currently happening around the globe or related to the pairs I trade. And it's called Forex Factory or my Forex Factory. Right? So there are different platforms. There's investing.com, there's Forex Factory, there's my FX group, different platforms, that you can use for this. So let me show you guys. So you can see right here. I've always been telling you guys about this platform, Forex Factory, and it should be coming up right about now. Yeah. So this is my Forex Factory. So all you just do is you go to Chrome and say www.myforexfactory.com, or you can also download the app on Android. Just go to, I don't think it's on Play Store. You go to Chrome on your Android and download my Forex Factory. So it's to keep you like web-like, app-like version of it. It's not like a full app, just like the web-like version of the app. So that is just how it is. Or use my FX book. My FX book is on Play Store. You can download it. And this is what you want to be doing when you come to the trading app. When you come to my FX book. So you want to be looking at calendars. Now, today is Sunday, so market is closed. There's basically no news. Right? I hope you guys can see my screen. There's basically no news on Sundays. Basically no news on Sunday. So now you can see on Monday, JPY holiday. So pairs, so later this night, by then, because the Asia session is the session that opens first. Right? So we'll be fast asleep. The Asia session wouldn't move at all because Japan are on holiday, the banks are on holiday. So what are they celebrating? So in order to know that, you click this folder right here. And then you see Japanese banks will be closed in observance of Greenery Day. So they're observing Greenery Day, so they are closed, right? And GBP will also be closed. So pairs like British Pound, GBP USD, GBP JPY wouldn't actually move because why? The banks that actually push price are actually closed. So price won't really move like that. So what are they separate? They say UK banks will be closed in observance of May Day. So they're observing May Day, and you can see Forex Factory is giving out information. You can see the usual effect of this news is low liquidity and irregular volatility. So low liquidity means there's not enough liquidity, enough flow in the market to push price. So if you're buying, price will be slow before it even gets into your take profit. You have to wait and wait and wait. So there's no liquidity. And I love trading high volatile session, high liquidity, so that the moment I get in, when the price just moves straight to stop loss or take profit, as the case may be. So that's what I love doing. So now on Tuesday, we also have GBP bank holiday. Like you can see, the ash folder signifies bank holiday. And then Japanese banks will be closed in observance of Children's Day. So GBP JPY pairs will not move. And then we have by 3 p.m. we have ISM PMI on the USD pair. Now what is this? You can see level of diffusion index based on survey purchasing managers excluding the manufacturing industry. So now, what does that mean? Now this is like what word would I use? Would I say like let's say a survey done on industries, right? Survey done on industries, purchasing managers, but they're going to be excluding the manufacturing industry. Don't worry, in a later class, we'll dive more in depth on fundamental analysis. So they're telling you the usual effect, greater than forecast is good for currency. Now, what is the forecast? Check here. You can see the forecast, what you're expecting this survey to be should be 53.8. And what happened previously, 12.0. So what Forex Factory said greater than forecast. So if the value turns out to be greater than forecast, then that means if it turns out to be 55.3 or whatever the case may be, then tends to strengthen the USD because you can see it concerns the US dollar, United States dollar. And then this is Joe's job opening. Now, what is this telling us? Let's check the folder. You can see the number of job opening. That means the numbers of jobs that were opened in the United States for the last month, which was April. So that is job. Now you can see if now you can see forecast. They're expecting 68.7 million jobs opening, and previous was 6.87 million jobs previously, and the previous was 6.88 million jobs for the last month. So now it turns out to be higher than this value they're forecasting, then to strengthen the US dollar. And then on Wednesday, we also have GPY bank holiday. What are they celebrating? What are they observing? I think Japanese banks because the observance of Constitution Day. So this week is basically for GPY bank holiday, and on Friday we're having the big one, which is NFP, non-farm employment change. And you guys have been trading, you guys understand that. During NFP week, I don't trade. Why? Because the market has no true direction until Friday. Whole of the week, check it. You can check any pair correlated with the USD. Check gold to no true direction. To just be tracking everybody. Goes up, come down, goes up, come down. And then Friday, you see expansion. That's what actually happened. So this week, I'm not going to be trading much for USD correlated. I won't even go close to it because I have nothing to do with it until next week, until this non-farm payroll has been released. Now, what is non-farm payroll? This is like one of the biggest news in the whole of forex space, biggest fundamental news. Now, you have to know all these things so you know when to get it. Like I told you guys. Now, I've seen that NFP is released. It's always released every first Friday of the month. Now, I'm not going to be trading NFP. I'm not going to be trading during NFP because what's market waiting for? Market is building. It's going to be building liquidity, gathering flow, so that once NFP is released on Friday, they go in aggressively. So that's what happens. And if you've seen price, okay, when was the last NFP? Let me show you guys something that happened. The last NFP, let's see. Let me check the date so that we'll go back to the chart and spot something else. The last NFP was on April 3rd, 2026. Let's go back to the chart so I'll show you guys something. April 3rd, 2026. April 3rd, 2026. Share my screen. Stage. So let's go to April 3rd. That's the calendar. Yeah. So people with April. People with April 3rd. That was the first Friday of the month to go to. Can you see? Can you see? Can you see? Can you see this move? And it's always released by 1:30 here. You can see this move. Now, whoever was longing here, whoever was thinking GBP is going to be going up, maybe bought from here. Bought from here, maybe follow the double pattern. I don't know what his analysis might be. Like, okay, price is going to go up. Eventually, this is what happened. Liquidation. So, if you long here, maybe bought from here, and he was expecting a risk reward of 1:2. Price would have smashed the stop loss aggressively. So I've learned that NFP is not to be meddled with, it's not to be joked with. So that's why I don't trade. I learned the hard way. So if you're smart, do not joke with NFP. I learned the hard way. My account of over $200. I think I was long into previous, and price just I was up about $8 in profit. Something was like just walking away with this profit. I was like, what if the NFP comes and that greed now that steps inside that? What if the NFP comes and it goes in your favor? You will be able to catch crazy move. We make crazy amount of money. I was like, okay, let me just wait. And immediately NFP came in and eventually flashed down and hit me. Like, no, I had a stop loss right there. I think my stop loss was about $10 or so. No, I was like, okay, if what's coming to loss, I'm just gonna lose $10. But then my broker, which is Xmas, they didn't execute my order at $10. What happened? Price dumped. And they executed my order after my account has been liquidated because the move was aggressive. Now, what happens during NFP move? In case you guys don't know. Now, NFP, a lot of traders are looking to jump into the market. Everybody wants to place trades at that moment. So Brokers are filled with orders. They have to fill in every trader's order. So you all might not get filled exactly at the price you want it to be filled at. It's called slippage. So you should go and look. You should do your own research. I'm not talking about slippage right now. You can do your own research. What is slippage? How does it occur? A lot of traders are just jumping into the market, slamming in orders. They want to buy, they want to buy, they want to sell, different things. So that was what happened there, and my account was liquidated. So from that day, I was like, I actually learned. I learned the hard way. It was like a fare I paid, a fee I paid to the market to learn. Now you don't have to go through that, right? Because now I'm here to educate you. Except you want to be greedy, you want to, you want to see what's happening. You can go ahead, probably be my guest. So that is it. That is what fundamental analysis helps us to do. So this week, I'm not going to be trading much because of NFP, because there's no true direction in NFP. You guys have been on my Telegram promise. You guys, whenever it's NFP week, I'll tell you guys this is what's happening. I'll keep you guys updated. So if you want to be updated, just join the Telegram community. I'll drop the link in the description and also comment section. So you just click and join Telegram community. And then the last one is invalidation. Right? Invalidation. Now, what is invalidation? Invalidation is, a rule I give to myself that okay, the price does this. I'm closing out this trade, whether I hit my stop loss or not. It means that trade has been invalidated. But there are sometimes I'll just get into a trade and I'll be like, okay, I decide to be wrong when price hits my stop loss. So if it doesn't hit my stop loss, I leave it. There's a time where someone I called a trade and it was just dropping. When drawdown, and someone was like, second takes, boss, can't check out that trade I called. Can't check out that trade I called. And I just smiled. I was like, even if you hit stop loss, you're still fine because that's an invalidation. No, people see stop loss as they loss, but stop loss is not supposed to be seen that way. Stop loss is just like a protection, just safety net. Now, for example, stop loss is like you stopping a trade from blowing your account. Now, I met somebody, man, actually. He was like, he doesn't trade with stop loss. And I was like, and I asked him why. Why don't you trade stop loss? He said that banks they don't trade with stop loss, which is actually true. Banks they don't trade with stop loss. Why is that? It's because they have a very big capital size. So they don't trade with stop loss. For example, if the banks they actually hedge. Now, what is hedging? I'm not going in depth, I'm just going to give you guys for special purpose. Now, hedging is if if they're going to be buying gold, they're buying gold, they're going to be buying, a risk of asset like what I say GBP JPY. Because over time I realized that if gold is going up, GBP JPY will be tanking. It's called correlations. Now gold is going up, GBP USD JPY will be tanking. So that's what the banks do. They like to protect themselves from those risks. That's the way they protect themselves. But we as retailers, the only way to protect ourselves is through proper risk management and trade management. Now, whenever you're trading, you set a stop loss to protect your account in case that trade goes against you. Now, you guys can remember that move that happened on GBP or USD that liquidation of the BOJ, that's the Bank of Japan, stepping in to protect their currency. Now, imagine someone trading without stop loss and he used a very crazy amount, very big lot size. He used a very rich value lot size. Person wants to be rich wise. Now increases his lot size. I'm like, okay, I'm sure about this thing. I'm very, very sure. And I'm going to trade. And this person that has this mentality of not trading with stop loss. His accounts will have been liquidated and they have become forex is scam. Everywhere, nothing is happening. This person is charged. Just start bashing and say that manner of rubbish. But when you have proper risk management, that you use a lot size relatively and decent to your account size, and you set stop loss. If anything happens, worst case scenario, the stop loss protects you. So that is why we set stop loss for cases like what happened on Thursday, not because we don't know what we are doing. So you should see stop loss as a protection, as a stop trade, like it stops you from facing further danger. So that is what stop loss is all about. So that's what invalidation is all about. So let me take you guys to the chat and show you guys something. So you guys can see, let me reset chat view. Okay. Now, I took this trade on Friday, this one right here. And this was when my stop loss at this price, 1.379. Now, what was the validation for me? My validation was if price ever now during this drawdown, price pushed up. I was thinking price was going to remain, but when drawdown started doing this, coming further down. And I was like, if price ever comes back down here, hits my stop loss, I agree to be wrong, right? So you have to, I'm going to teach you guys how to set stop loss properly so you don't get stopped out anyhow, right? And eventually during New York session, so also happened and profit and close out with profits. So this one too as well. What was my validation? I was like, if price gets back down here, price gets back down here for any reason, I agree to be wrong and close out the trade. So that is invalidation. That is just invalidation, right? What was my validation here? I was like, okay, I'm shorting. The price eventually comes back here, above here. I'm going to be closing this trade because why? Now, if you look at this pattern, let me join it to this one. You can see this is a W. If you look at it now, I've told you guys W doesn't form perfectly because why? Price is grabbing orders. So you might get here and traders might want to get in for more buy position, put their stop loss here. For example, you're like, okay, it's time for price to go. Put stop loss here and you're looking to make profits, maybe take profits somewhere around here. And before you know it, price will come back, grab more orders. And eventually, after grabbing, once it's done, starts reclaiming, reversing. So I told myself, if price gets back here, closes the momentum, like with a full body close, not weak rejection, a full body close, because you guys about candlesticks. I'm going to be closing this trade, whether it hits my stop loss, because eventually it's going to hit my stop loss. So that's what validations are. So over the course of the session, you guys get to understand how I get to, decide on my validation because I'm breaking down every trade I take during the weekend. We come to the live session and break it down. So that is it. So those are the things I look out for. Those are the things I look out for. These are the 7 things I look out for. So I guess we've come to the end of today's class. If you have any question, no problem. Hit in the comment section and let me answer your question. If you have any question concerning today's topic, just hit in the comment section right now. Let me clarify those questions for you before we call it a day. I think it's exceeded our time, so we have 17 minutes extra. Someone said, my brother, I need some friends in trading next USD. I have 3-year experience in markets. I don't understand what you're saying. Say you need some friends in trading next USD. So if you have any question, let me know. 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 Let's say from is this India? Are you from India? Just drop your country flag. Drop your country flag. Okay, no question. You understand perfectly. Okay. I have a question, but let me know how. I have a question, but let me know how the trade line. Just gonna watch the previous lessons, then you understand how I trade. Have I trade based on point of hesitation, psychological levels, previous days high and low liquidity sweep, and candlestick confirmation. That is all I do. And once I see that, all of them must align perfectly. All those 4 confluences must align. Now you guys have seen my trade. You see that I always mark point of hesitation. Once I mark the point of hesitation, price sweeps, and then also mark the previous day's low or previous day's high. So whichever liquidity is getting taken first. So if it takes out the low or it takes out the high, okay, I know that the next direction is going to take out is the other one. So if it takes out the low, I'm looking to join the banks to take the high liquidity because price moves from liquidity points to liquidity points. That's what facilitates price. That's how it moves. Yeah. Yeah, I trade liquidity. Yeah, I trade liquidity because that's what drives the market. I trade liquidity. I joined the banks. Like I explained my gold trade earlier. I took that sale to join the banks to sweep that liquidity of the previous days because I knew that that's where price is going to head to. So that's what I did. But what I normally do, I wait for one side to be taken out first before I join the banks to take out the other side. But that gold trade, like I said, it was a lucky one because I didn't follow my rules perfectly. I felt like let me just get in for that sale because I knew price in the downtrend. So what's going to happen is going to sweep that liquidity, and then after that maybe reverse take the next liquidity. So that's why I took on that gold trade. That gold sell I actually wrote down. Okay, just stick around, and then you get to trade better, right? You get to trade better. So, okay, if what I've been saying makes sense to you so far, I would love you to drop number three in the comment section. Drop number three in the comment section if you understood perfectly. And make sure, don't forget to hit the like button and share. Drop, sorry, someone walked in, and I was thinking of someone I knew. So, don't forget to hit the like button and turn on the post notification so you always get a subscribe if you're not yet subscribed. So you always get a notification whenever we are streaming live, so you don't get to miss any of the live sessions. Yeah, and if you have any question, I'm always active on Telegram, Instagram, so just hit me up on any platforms. I'm gonna be dropping my handles in the comment section and also in the description. So just hit me up and then get to talk and clarify whatever questions you have. Right? Yes. So okay, three, three. Okay, I think majority of the persons understood. All right, so I think we've come to the end of today's session, and as I'm always happy to be on your screen, I guess I'll see you guys next week Sunday, same time, 6:30 p.m. So bye, and always remember today's a new day to become a better you. So trade smart, and I'm gonna see you guys next week Sunday. Bye.